Alright, welcome back. You tune in to Market Fatafat where we are taking you through all the stocks that are in focus today. And now we are joined by Sameet Chavan, who's the Chief Analyst, Technicals and Derivatives, Angel Broking on the technicals, and Anj is rejoining us on the research. But coming to you, Sameet, you've picked out PFC Power Finance Corporation. This has been on the radar for quite a few techies. Tell us, what are you seeing on the charts for this power finance company?
This has been one of the rank outperformers in last 1.5 years itself. So if you see recently, stock prices went into a consolidation mode, and since last couple of trading sessions, we have seen some early signs of weakness. So it may not be a complete trend reversal as such, but at least short-term pause is clearly on card. So we expect this stock to continue this consolidation phase, but with a slightly negative bias. So at higher levels around say 535, 540, this stock is likely to face strong resistance, and we are likely to see some profit booking extending in coming days. Next important levels to watch out for would be around 500 to 495, and on the higher side, as I said, 535, 540 would act as a very strong resistance.
Okay, so those are the levels coming in for PFC, but with that, let's also take a look at another stock that's not doing pretty well in today's trading session, and that is Ola Electric. Now, two reasons why this stock is losing away in today's trade. In fact, seems to have largely recovered compared to the levels it was lower by early in the morning, but nonetheless, more than 1.5% lower is where the stock is trading right now. Now, the anchor lock-in period for 50% of Ola Electric shares, totaling to 18.2 crore shares, almost of 4% of the company's outstanding shares, ended on Friday. Now, the end of this anchor lock-in implies that 18 crore shares were locked in by anchor investors, and they've now become free to trade in the market. On the back of that, some volatility was seen in the stock since morning, because at one point in the trading day, this stock was lower by almost 4%. Other than this, also, the second news flow is that you have very recently, about an hour or so ago, you have Ather Energy, which is a competitor of Ola Electric because it also makes electric two-wheelers. Ather Energy has filed for its IPO. They filed its DRHP to raise 3,100 crores. So the opening of the lock-in period and the emergence of a competitor into the listed space very soon are the two reasons why Ola Electric is not doing well.
Alright, moving on to another counter that is in focus today, Tata Technologies. The shares fell even as international broking firm Citi maintained its sell rating on the stock, but raised the target price from to 445 rupees from earlier 335 rupees. Now, the upward revision is based on marginally higher estimates for FY25 and FY27 and a positive outlook. Now, the target multiple for the stock has been adjusted to 42x from previous 40x, and also it reflects the re-rating in the Indian market and the sector as well. But while the company's growth potential remains rather strong, driven by resilient tech spending in the automotive vertical, Citi has factored in the uncertainties surrounding the VinFast revenues and the client concentration risks as well. ICICI Securities, another brokerage that has come out with a buy recommendation on the counter, setting a target price of 1,290 rupees based on the 1-year forward PE of 56x, aligned with its historical median. Now, the brokerage noted the risks, including the under-penetration in the Europe and the challenges in other sectors, which may not fully offset the decline in the VFAST contribution. The brokerage has also kept its price target unchanged following the analyst meet. So that's Tata Tech for you.
Alright, so that's why Tata Tech is in focus today. But moving on, Ansh, you picked out Adani Power for us. Tell us what's the news flow.
Right, so the company has informed that the acquisition of Lanco Amarkantak Power via IBC has been completed, and they have also said that the LAPL houses a 300 megawatt, which is around 600 megawatt operational thermal power plant in Korba district of Chhattisgarh, also setting up of around 1320 thermal power expansion capacity at this location under the phase 2. Also, if we see the chart, then the stock has actually fallen around 30% of its June highs, and as per RSI indicator, the stock is currently trading around its oversold region, which seems positive for the stock.
That's why Adani Power is in focus today. Let's also talk about a stock in focus, and that is Granules India. Now, the share price tumbled as much as 4% in today's session because the company's Gagilapur facility, which is in Hyderabad in Telangana, has received 6 observations from the US FDA, and the inspection took place at this unit between 26th of August and 6th September, both the current good manufacturing practices, which is the CGMP, and the pre-approval inspection, which is the PAI. Both of these processes were covered in this recent inspection, and it has concluded the inspection with 6 observations coming in, so not looking very good for this facility. And Granules India is dedicated to promptly addressing the observations and will submit its response to US FDA within the specific time frame. This is what the company has said. Now remember, this Hyderabad facility remains integral to the company's global operations and also guarantees the delivery of top-notch pharmaceutical products to the global markets, which means it's one of the most important units when it comes to Granules India, and 6 observations for that unit does not look good. Now on the back of that, the stock is still lower by almost 3%.
Alright, that's Granules India, but moving on to Shriram Finance, the counter in focus, because UBS is maintaining a buy rating and they've raised target price to 3,850 rupees per share. They've also raised their price to book value target multiple from 1.8 times to 2.2 times due to higher growth visibility. Now the synergies from the merger is likely to keep aiding the NIM compression transitory, but accomplishing new segments further is the key, and asset quality is also likely to remain stable, and the credit cost guidance that are likely to be maintained going further. And on the back of that, Shriram Finance is trading with gains of almost 2% in trade.
Okay, so that's why Shriram Finance is in focus. But keeping it with financials, Ansh, you've picked out AU Small Finance Bank. Tell us why this has made it to your stock list today and what's the news flow.
Stock is trading with around 1.5% of gain today. So the bank and UIIC have formally signed a strategic alliance agreement, and the agreement was signed by Mr. Uttam, who is the Executive Director and Deputy CEO of the AU Small Finance Bank, and with Mr. Bhupesh Sushil Rao, who is the Chairman and MD of United India Insurance Company, which is a UIIC. Now, this partnership marks a meaningful step towards realizing that the bank's vision of Forever Bank, which aims to provide comprehensive financial solutions across the country. This collaboration also positions AU Small Finance Banks as a preferred choice for its diverse customer base of across 21 states and 4 union territory, offering reliable and affordable general insurance solution. This partnership also leverages UIIC's vast network of which has a branch in over 1,000 Tier 2 and Tier 3 locations, aligning with AU Small Finance Bank's expanding infra and growing customer portfolio. Also, if we see on chart, then the stock had actually given a breakout last week only, and from last 3 sessions, it's already trading above that level only. So this seems positive for the company.
All right, staying with the banks then, why should investors really turn their attention towards banks? And the debate still looms around the private versus the public bank sector. Now let's get a better picture and understand where should you park your funds. Here are the views coming in from Macquarie's Sandeep Bhatia. Let's go across and take a look at what he had to say about the banks.
Not private banks will be placed better than public sector banks. That's a given. What needs to change is 2 things. I think we need to see some rate cuts coming in India. Those rate cuts don't seem to be coming immediately. The Fed will definitely be more aggressive in cutting rates in the US than I expect RBI to cut rates in India. We could see a rate cut maybe next year, post the Fed budget. So that's where it is. The other thing which needs to improve is that government spending, and government should run down their surplus cash balances. Overnight liquidity, which has already improved, should continue to improve, and rates, short-term rates can fall. If that happens, that would be good for private sector banks. But in the next 6 months or so, I think private sector banks will be range bound and unlikely to be driving the market further.
Okay, well, let's move on from banks. Talk about HPCL. Sameet, you picked out this stock for us. Last 1 year also, the stock has more than doubled and, looking good on the charts because in the last 6 months as well, the stock is up 24%. Tell us, what are you spotting for this stock going ahead? Do you think this rally is going to sustain, or are you seeing a time for a short breather now for this stock?
Yes, at least in the near term, we could see some breather in this counter. In fact, the entire OMC space has done, phenomenally well over the past 6 odd months. But as far as the HPCL is concerned, last week, toward the fag end, we witnessed some profit booking happening in this counter. technically speaking, we could see a formation of shooting star pattern on the daily time frame chart, which got confirmed on Friday itself, and today we are seeing the follow through action of that particular bearish pattern. So at least in next 3 to 4 trading sessions, we expect this weakness to continue. Next important level to watch out for would be around 415, which coincides with the 220 exponential moving average, which would then be followed by 408. So overall, at least for next few days, we could see some selling pressure happening in this particular counter at higher level. On the higher side, 430, 432 would act as a very strong resistance.
All right, coming back to you, Sameet, BEL is also another name that you've picked out for us, Bharat Electricals. Tell us, what are you seeing on the charts for this one in the last month? 1 month, it has been in a consolidation mode. Tell us what is the upside or you see from here on?
See, entire defensive space, which has done well in last 1.5 years itself. So overall, you see some sort of consolidation happening in this space now. Be it VEL, HL, we are seeing some consolidation happening with a negative buy. As far as BEL is concerned, this stock has been moving in a kind of rectangular pattern since last 3 to 4 weeks. This particular pattern has now been breached on the lower side. So stock has now slipped below its 89-day exponential moving average as well after nearly 6 to 7 months. So this suggests that some sort of weakness is likely to continue in these names. As far as BEL is concerned, on the higher side now, 285, 292 would act as a very strong resistance. In case of any relief rally, one should exit any kind of long position in this counter. And on the low side, will not be surprised to see the stock correcting to 260 per. And in case 260 is breached, then the next important sacrosanct support is around 240, which coincides with 200 average.
Okay, so that's the view coming in on BEL. But with that, it's the last stock that we were flagging off and discussing today on Market Fatafat. On that note, Sameet, Ansh, as well as Aditya, who joined us earlier, thank you so much for joining us. But we'll slip into a very short break on this edition of Market Fatafat. But remember, it's World EV Day today, and we've lined up a special programming for you on just that. So we'll take a look at that on the other side of this break.
If you like this video, then like, share and subscribe to ET Now.